What's up, everybody? It is Monday, September 12th. Hope you had a nice weekend. Not a lot to talk about today. The market continued its rebound, its recovery. That's good. It's what I was expecting this week. Now we have a couple of things going on tomorrow. Of course, the monetarist zombies are going to be focused on the CPI. And actually, the forecast for August is for a negative minus 0.1% in the CPI, so a contraction. But I noticed, like last month, when we had a flat, a 0% change in the CPI, that some of the media outlets decided to focus on the year over year, which was like 8.5%, just to keep the shock value going, and I'm sure that's going to be the same thing. So tomorrow we might get a year-over-year print of 8.1. That's down, but it's the monthly that you have to track, and that's going to be a negative number. But anyway, I don't pay attention to this inflation stuff. I think it's just a bunch of bullshit. I just, I understand people are affected by it, but as a macroeconomist, if I'm going to be here to help you, it doesn't help you if I come on these videos and say, oh my God, this is terrible, inflation, just like you're hearing from everybody else. If I'm going to give you the macro picture, which ostensibly that's what you're coming here for, then I have to give you the correct macro picture. And I don't get all wound up with the inflation. First of all, for me personally, yeah, I got to pay more money at the supermarket and airline tickets and every other thing. And it's annoying. I understand that. And I bitch about it too. Every time I go shopping now, I bitch about it. But, I have tools. Like I use my investment knowledge to help to offset that. I mean, just, on a basic level, stocks are a really good hedge against inflation. All right, I put up charts here in prior videos about, I showed you Argentina, I showed you Turkey, I showed you all these high inflation countries, and, an investor in local currency, investors, residents of those countries, had they used the stock market, it would have completely protected them against the loss in purchasing power from the decline in their currencies. Now, so like it's up to you. I mean, I suppose you come here for information, for the macro information. So that's what I'm going to give you. It doesn't help you. It does nothing for me to sit here and say, become hysterical and say, oh my God, inflation's going through the roof, and you better just run for the hills. No, I'm here to impart some wisdom, some knowledge to hopefully help you, navigate through this stuff. So me personally, I don't pay any attention to the inflation stuff. I really don't, because I understand what it is. All right, it's a redistribution of income. And it stays in the economy. It gets shuffled around. Some people win, some people lose. You might be one of the losers, but you don't have to be. Okay, if you're one of the losers, then you're not employing the tools to at least protect you somewhat. I'm not saying it has to be a complete offset. Anyway, Friday, because I just went over the fiscal, the daily treasury statement. Interesting, because Friday was actually a drain of 3.3 billion. And typically what we see on days of net drain is that the market's a little wobbly, but we had a nice rally on Friday. And I chalk that up to short covering. I mean, now it's pretty interesting because that's a clue. We got to be like little detectives here looking at the evidence, and that to me is a clue, because on a day when the market should have been weak or had trouble making gains, it went up. And it tells me that we're at some threshold right now. I don't know if it's technical in terms of chart levels or something. I don't know if it's technical in terms of, some other dynamic going on internally in the market, but it went up on Friday on a day that normally, with that fiscal drain, it wasn't a big drain, it was 3.3 billion, but still it was a drain. That was the second drain this month, and it was the biggest. The first one we had was like, I forget, maybe a 1 billion or something. Anyway, so yeah, market rallied on Friday when we had a net drain. Now the big news, and this is something I've been preparing you guys for, going all the way back to July, maybe going all the way back to June. I said that September 15th, what happens? We're going to get a quarterly corporate tax payment. We're going to get 110, 120 billion drain. And, for the last 3 months, I've been telling you guys that this is going to be negative for the market. However, over the second half of August, when we had that big pullback after Powell did his 8-minute, I'm going to inflict pain on you speech, I felt that the pullback went a little bit too far. And I surmised that maybe some of that selling was front running ahead of this quarterly tax payment that's coming up on Thursday. And so far, it looks like it, because we're coming into that, we're a couple of days away from that. And ordinarily, at least the pattern that I've seen in the past is that as we get closer to these tax payment days, you get market weakness. It's not like it happens on the day. It can happen on the day, and it can happen, it often happens even after the day. But typically we also see some weakness leading up to the actual day when that payment is due. But we're rallying into this. So that's going to be a test of my my speculation that, some of that selling in the second half of August, which was brutal, everybody was freaking out. I mean, it was crazy. But we're recovering those levels. But I said it's probably has something to do with front running ahead of this scheduled tax payment. Like, people were just like, oh man, I better sell because he's going to inflict pain. He's going to destroy the market. Like, if you listen to these guys, and if you put credence in their words, then you allow them to suck you into their to their belief system, to their lack of understanding, to their nuttiness. I mean, we had I don't know if I talked about this, but we had a thing on Friday where Yellen says, that she's going to be really, really diligent now on making rich people pay their taxes so the government's finances can stay, on an even keel. Now, I got nothing against rich people having to pay taxes, because let's face it, over the last 40 years, they've been accorded so much fiscal largesse, so much fiscal support. If you understand that tax cuts are the fiscal equivalent of spending increases, it's like giving them a check. So if you're going to have policy intended to claw back some of those outside gains that rich people were given over the last 40 years, that's something. I mean, I think that is a valid argument. That's a valid reason or rationale for doing it, all right? If it's given back to working people who really, if you look at labor's share of GDP, like, how much of that product that you work to make, how much do you get? And I'm not necessarily talking about the product, like whatever it is you're making, a car or whatever, but how much of the GDP, of the output of this economy, do you get as, you know, as a consequence of your labor? And that's just been going straight down for 50 years. So like, and the rich been going straight up. All right, and most of their gains are financial. It's not, they didn't make anything. So if you wanted to have that argument, but no, Yellen's argument was like, we need the rich people's tax money. I mean, this is, folks, I just, like when I hear this stuff, I did that video last week about how I want to get out of this business, because when I hear this crap, it drives me crazy, man. Crazy. I mean, nobody could even pay their taxes until the government spends those dollars into the economy first, right? You can't drain a swimming pool until you fill it up. If a swimming pool is empty, and let's call the water in the swimming pool dollars, all right? Dollars come from the government. Nobody makes dollars in their home or factory or somewhere. China doesn't make them. You don't make them in your basement. I mean, the government has to add those dollars into the swimming pool before they could even drain them out. So Yellen is a basic concept that she screws up and doesn't understand. You know, again, if you want to have a discussion, it's a political discussion that, yeah, we ought to tax the rich because they've been given all these outsized gains for the last 40 years, and it's a clawback, and then we'll redistribute it to workers who have seen a shrinking in their, the percentage of GDP that they're involved in making. That's a valid conversation we could have, okay? But for her to say, yeah, we gotta tax the rich to make sure the government's finances are okay, that is just ridiculously stupid. This woman is stupid. But it's also a function of, you know, their cult, their belief system. This is mainstream economics. They all think this way. So anyway, let me get back on track. So if we don't have this pullback, you know, on Thursday, I said it would last from the 15th until October 6th. So we'll see. Why October 6th, you might be asking? Because it takes about 3 weeks for a drain of that size, 110, 120 billion. Remember, this is not like an April tax drain, 330 billion. For a drain of that size, and don't forget, we're going into this drain with a 90 billion, 88 billion deficit. So 88 billion has been added to the swimming pool coming into the drain, okay? And then they're going to drain out the 120, 110, 120 billion. 88 billion this month. Last month they added 227 billion. So, you know, we're like almost 330, 317, 315 billion was added. Now they're going to take out 110, 120 billion. And why do I say October 6th? Because a drain of that magnitude, 110, 120 billion, takes about 3 weeks of spending to recover that. This is another reason why, you know, I'm not really concerned with taxes. I mean, I am personally, like everybody else. I hate to pay them, and we are severely overtaxed as a nation, as a people. We are severely overtaxed. But I'm not, you know, as a macroeconomist, it doesn't bother me, because if the government is running a deficit, by definition, what does that mean? It means that they're spending more than they're taking away in taxes. So the swimming pool is filling up. It's filling up all the time. So I don't worry about it. When everybody freaks out and says, oh, you know, the Democrats or Biden or the Republicans or whoever are going to raise taxes, as long as the net spending is positive, in other words, they're spending more than they're taxing, the swimming pool is filling up. And that's what I focus on. Anyway, that's it for today, folks. Go to my website, pitbulleconomics.com. Sign up for a 30-day free trial of MMT Trader. I'm getting back in the mood. I want to go back to Colorado now and do another 14er. Well, last time wasn't a 14er, it was a 12 something, but my son is over there in Switzerland and he hiked this mountain to 14,300 and he sent me some pictures and they were like, the crazy thing about the Alps, like Colorado has 58 14ers. That's 58 mountains of 14,000 feet or higher, slightly higher. But the thing about the Alps, and I lived in Switzerland for 10 years, the Alps are lower than Colorado, but they look way more impressive, like these jagged peaks just jutting out from, you know, from the ground. It's very concentrated and it's very like straight up jagged peaks. So you don't have to hike that high to see phenomenal vistas and views. Colorado, you're already starting at a level like Denver's 5,000, the altitude's 5,000 feet, so you're a mile up, right? The Mile High City. So like a lot of these mountains, you get up there and the views are incredible too. The views are incredible too. Anyway, that's it, folks. See you tomorrow. Bye.